There you are. I know why you're here. You're looking for the housing market update for Southern California that we do every 2 weeks. We're going to run through the single family and multifamily numbers for Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties. Plus, we're going to dive into the median home price numbers and show you the median home price. Had you bought a home 10 years ago, you won't believe the increases. Hey there. Christian Walsh, real estate agent with Wire Associates. We have been helping buyers and sellers and tenants and landlords make the best decisions in this crazy market. And we're here with our usual every 2 week update. We pull this data right from the multiple listing service so you get it as soon as you can. You don't have to wait a month for other resources like the newspaper or other YouTubers. And you don't have to wait 2 months like you do for the Case-Shiller Index. You get the information now. A quick important point, the data you're about to see doesn't reflect the invasion of the Ukraine by Russia. It's too soon to show up in the numbers. We do expect it to be in the numbers for halfway through March and the full month of March. Of course, if you're subscribed to this channel, you will get those updates. And we've just released a video that we'll link above so you can go ahead and check that out. It talks about what we think may happen to interest rates, inflation, etc., due to this invasion and what effect it may have on the U.S. housing market. So if you're ready to dive into the single family and multifamily sales and median home price numbers for LA, Orange County, San Diego, Riverside, San Bernardino, and Ventura, hit that like button. And let's get started. And let's dive into the data, starting with Orange County. And here we are for February, and we're going back to 2018 so we can get the year-over-year data, see the real trends. And if you've been watching these for a while, you'll know I often talk about the start of 2020 as being a very good start for a year in sales. And you can see it here in the data. It was going to be a good year before COVID hit. We won't see any change in the numbers until really in April of 2020. That's where you start to see the big dip, and then things got crazy from there. So looking at 2022, we can see the usual trend we've been seeing. When we have a dramatic drop in the number of listings, we're at record low listings. We still are at crazy numbers of properties going under contract when you compare it to the number of listings that are on the market. You see they're very close together. So crazy seller's market. And that's what we're seeing out there. Anecdotally, with some of the buyers, we're seeing fewer offers. There may not be 20 on a property, but there still could be 5 to 10. And usually they're all solid offers. It's much less likely today that there's going to be a lowball offer on a property. And the terms are crazy. I had a couple clients this week. We wrote offers. We came in second, and we got barely beat on one tiny term. These were fast closes. Everything was good. So anyway, crazy times out there for buyers. Sellers, you just sit back. You can still overprice. We've done videos on that, but for the most part, if you're within reason on pricing, you're going to get a few offers and be sold very quickly. So if you're selling, know where you're going before you jump right in. Moving on to Los Angeles, we can see again, like I said, 2020 was a good year. 2021 turned into a crazy year for Los Angeles, and they actually had a solid number of listings come, but we're at record low levels of listings hitting. Now, these aren't dramatic lows. You can see that we're off by maybe 1,000, which isn't as proportionally isn't as many in LA, but it still is a seller's market because we've got the pending sales so close. Riverside's been definitely a seller's market. It's more affordable, so we've been seeing people, we used to say drive until you qualify. This is before the global financial crisis. And don't take this as a sign that we're going into a crisis, but as affordability gets crunched along the coast, you get in your car and you drive out east until you can afford to buy. And that's what we're seeing here in Riverside. It's basically just an absolute frenzy out there. Anything listed is going to be sold. San Bernardino, record low number of listings. I mean, look at the drop off from 2018 to 2022. About 800. Now, proportionally, that's a huge drop in the number of listings because it's a much smaller number that actually are listed and sold in San Bernardino. So that's crazy, and you can see those numbers are close together. We're getting close to that twist, but it's irrelevant. It doesn't have to twist between pending sales and listings for it to be a crazy market. It's a crazy market right now for sellers getting top dollar and buyers fighting to buy. So Ventura, we can see listings down. We can see the pending sales are down. They're back to 2018 levels. It's funny, actually, 2022 from a pending and closing standpoint looks a lot like 2018 in Ventura, but you can see there's fewer listings. So it's going to feel definitely like more of a seller's market. And San Diego has continued to move a lot like Orange County. We've got that big drop in listings, record lows. We can see pending sales are getting very close to the listings. So again, an extreme seller's market. Moving on to the Southern California multifamily data, one of the only places you're going to find this. So Orange County continues to remain a solid multifamily market. It has been, other than early on in COVID when all multifamily sales slowed. Since then, Orange County's remained strong. And you can see we actually have the twist between pending sales and new listings. And I see it out there. I have a few multifamily listings right now that are keeping me busy. I will say you still have to price right, obviously, and it's a little bit more sensitive to cap rate and the rate of return, but for the most part, it's a frenzy in Orange County. And LA just continues to boggle my mind. We see a solid amount of demand. In fact, more demand this year than last year. Now, the Los Angeles eviction moratorium is still in place, and I've done a video on this, done several videos. This is a very, very difficult time for landlords. If you have a tenant not paying, rental assistance funds are getting lean, and you're going to be stuck with that tenant. When the rental assistance fund run out, you're going to be stuck with them through 2023 in Los Angeles based on the way the eviction moratorium is set up. So despite that, there's still plenty of optimism, and we see a lot of folks buying in Los Angeles. This also affects investors in single family and condos as well. Now that's a smaller subset of the data. It's harder to suss that out. But this here, these are pure investments, and they are being bought and sold like crazy. We can see listings are pretty regular year over year, but the demand is way up in a place where you cannot evict a tenant for non-payment of rent, and they have to live there rent-free for over a year. Riverside, solid market, big drop if you look at 2018 in the number of listings, slight drop year over year in the number of properties going under contract, but nothing to be afraid of. Bigger gap actually than 2020 and 2021 between new listings and pending sales. What that could reflect, and I guarantee if you look at the numbers, is overpriced listings that are coming to the market that aren't getting offers, but they are going to sell as long as the owner really does need to sell and is eventually going to get to reality on price. But still a crazy market for sellers. San Bernardino, we can see very solid demand. Last year had very solid demand. Last year under the eviction moratorium. So again, crazy to me. But this is a slightly more affordable market for investors. They get a slightly better return theoretically. So that's why we see the higher number of contracts. And there is very solid demand. There's a lot of 1031 exchanges out there right now. And we've done content on this. And if you're watching these numbers, you most likely understand the 1031 exchange. The interesting thing is you're selling at the peak, but then you're buying at the peak. And that's what's tough for some investors to do these days, but we still see stuff trading and tons of 1031 exchanges. In Ventura, we see a dramatic number of listings in 2020 at this time, and that's pre-COVID. So a lot of investors just figured, hey, now's the time to trade. My building is at a record price. Little did they know what was going to happen COVID and then after COVID with values. But that was a big bump in the number of properties listed. That would have been a buyer's market in 2020 in February. If you got your time machine, jump in there and head back. But we can see in 2022 that it's pretty much returned to more of a stabilized normal market. In fact, there's actually the twist in 2021 and 2022, but it's a one property twist, so that's not huge. But a solid market. If you list at the right price in Ventura, you're going to go. And San Diego is Orange County's sister from another mister, or vice versa. The markets are almost identical in the number of listings, although in Orange County, we see it closer to the twist than we see here in San Diego. But still, they're getting closer, and that's a lot of buildings trading in the month of February. So this is definitely a solid market for sellers to be selling. but you're selling at the top. Where are you going to take your money if you're doing a 1031 exchange? It's also a good time to just cash in your chips, and I have some investor clients that are doing that. So there is your multifamily market update for Southern California. And yay, you know what time it is. It's median home price time, where we get to see if the median home price has gone up or down, and it has gone down in the past couple months like it always does. Remember, we talked about that. Well, this is the time of year where it continues to go up. Now, I didn't expect this, but doesn't matter anymore what any of us expect. And what I didn't expect was the huge increase in median home price that we're seeing already in these different areas. Now you can see that Orange County is at $939. That's for a single family home that's detached plus condos that are attached. LA's at $835, Riverside's $581, $750. Now that's a new peak for Riverside and Orange County. For LA, they were a little bit higher in actually December, believe it or not, which is usually the time when it's way down. So that's weird. The other interesting thing we're seeing is the year-over-year changes. Now the year-over-year changes in value should be slowing down. We need the brakes to be pumped on these year-over-year increases. You can see Orange County year over year 20%, LA 11.5%. Now that is slower, but still not slow enough. And we may see in the March data that it actually has increased. Riverside is 22.5%. Those are crazy increases. We can't keep moving like this. Affordability continues to be crunched at a very rapid pace. Just for fun, which isn't much fun, it actually makes me want to cry. Let's go back 10 years to look at where the median home price was in February. And here's why 10 years ago is actually even more interesting. 10 years ago is when we saw a turn in the real estate market in Southern California from the global financial crisis. So this is when things turned and values started to go up. And you can see it in this line. But look at these numbers, and I can lament with you. I didn't buy anything in February 2012 either. I sure wish I did. But 360, 310, 187. What is that? 25 for, well, 30% of where they are today. So had you bought 10 years ago, just stayed in your house, made your payment, you'd have about 300% increase in value in Southern California in 10 years. That is unbelievable. San Bernardino is not quite at a record. It was slightly higher in December, like we saw in Los Angeles, but it is still at crazy record highs. And year over year, 15.7 for San Bernardino. Ventura 15.7 and San Diego 17.3. So huge increases year over year. Again, we expect these to slow. They have to slow at some point, but big numbers. We'll take our step back in the time machine to see where things were in February. And yes, that hurts as well. Things were definitely lower back then. Tell your younger self, if you're ever able to buy a house in just before 2012, and you'll see that it's gone up. So there are your median home prices. They continue to go up. The spring buying selling season, we expect the median home price to continue to go this direction. I doubt we'll see any drops. It would be great, to be honest, if we just had a plateau at some point in time, but I don't expect it with the levels of inventory we have. I doubt we're going to see a plateau in median home prices going to continue to go up. When will the music stop in this game of musical chairs and values start to plateau? Let us know in the comments below. We want to hear what you think about the housing market 2022. If you haven't joined over 2,000 others and subscribing to our email newsletter, you're missing out. We're covering topics like this plus a whole lot more. Make sure you subscribe in the link below. Make sure you check out this playlist about the housing market 2022. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.